Hello, my name's Alan Foom, and today I'm going to talk about the sell-off in the US Strategic Petroleum Reserve. Is America selling its family silver, and what has been the impact on the oil market, and how long this will continue for? So, a brief introduction to what the SPR is. Now, it was established in 1975 following the 1973 oil crisis, where you had massive lines at gas stations and a desire to have a safety cushion in case there is further disruption in the oil market. Maximum storage capacity is about 720 million barrels, using salt caverns in Texas and Louisiana. There's a map here, and I'll show a slightly bigger map in a minute. It's close to a lot of large US oil refineries, an ideal place to do it. And you store it in salt caverns, dissolved within salt domes. They can release 4.4 million barrels of oil per day. That's roughly a quarter of US refinery input, so it's quite a substantial cushion. And a maximum capacity can cover 45 days of refinery demand, 140 days of imports, so a useful safety thing to have. But in the recent past, as you can see by these two graphs, so that's SPR with previous years, bump in 2020 for COVID, and then diving. And a slightly longer view from Bloomberg from the start, and then diving. Obviously, lowest in 37 years. We're now down to 470 million barrels or 29 days of refinery imports. Is that a big enough cushion? Maybe, maybe not. So here's some more graphics, and these are the four main storage sites. There's a slightly more detailed map here. These are salt caverns, and they can hold these numbers here, 218, 129, 180, 60. Again, all linked by pipelines to refineries. And this is a graph from RBN Energy showing that it tends to be mainly sour oil that is stored. And I'll come to that and why that is so important. So if you take back from 2000, this is the maximum storage capacity from 2019 figures. So in the early 2000s, you had a build. Then you had a plateau, 2005 to 2017. Then from 17 to 19, a gentle sell-off, and now whoosh, plunge. The yellow line represents the days of oil refinery capacity, and these are little local spikes. This is generally tends to be a refinery input, so tends to be when you've had damage to refineries, a slowdown in refineries. These are associated with hurricanes in the Gulf of Mexico, and that's associated with COVID. And that's a build associated with COVID where there was a glut in April 2020 when oil prices briefly went negative, or WTI prices briefly went negative. Okay, so what's been in terms of sell-offs and general change? So this is a graph of weekly change in the SPR converted to barrels of oil per day, thousands of barrels of oil per day. So you've had sell-offs, which generally tend to be hurricane mitigation. And in 2011, there was a coordinated sell-off with IEA countries to try to stabilize the market. Okay, test sale in 2014. Plateau in the 2010s, not much happening. This is the early 2000s build. This is the 2017 to 19 sell-off. So gradual sell-offs, COVID spike, we're trying to mitigate the glut. And then since Biden took over, massive sales. So we're now over 1 million barrels of oil per day equivalent are being released from the SPR. This is a little bit about American oil stocks. So this is from 2019. So the gray is the SPR, the orange is commercial crude. So this is crude, and these are the refined products. So that's gasoline, jet fuel, diesel. You can see the stocks of diesel have declined quite a bit. Refined fuel oil, propane, propylene, and then various others. And if you're looking at days of consumption, crude was at 65 days. That's both commercial and SPR. Whereas jet fuel, diesel, and gasoline at about 25 days in terms of stock. So it varies a little bit, but so this is the COVID bulge, this is the decline, and then the SPR sell-off here. It's a little bit less dramatic with this chart. So what's been the impact on oil price? Well, the oil price has steadily gone up since the COVID bulge, and obviously since Russia's invasion of Ukraine, it's gone up quite a lot. So this was the low spike in terms of WTI during the COVID glut. SPR responded by filling itself, then a bit of rebalance. So a little bit of a plateau and then steady climb since then. A bit of a decline recently, but that's global, not just WTI. So one could argue that maybe SPR sales, by adding 1 million barrels of oil equivalent of oil to the market, may have stabilized the situation to some extent. Maybe they have, maybe they haven't. But this is the scale of the SPR releases. So this is daily production of selected countries. So over 2022, so basically since Biden took over, about 628 million barrels of oil per day have been released from SPR on average. So that's the equivalent of Indonesia or Venezuela. In June, July, it was 929 million barrels. That's more than the UK, almost as much as Oman in terms of production. Peak week, June the 10th, almost as much as Angola and Algeria, OPEC members. So this is a vast, really large amount of oil being released into the market, about 1 to 1.5% of global crude supply. Okay, so if you add commercial stocks to the picture, and commercial stocks in orange, SPR in blue, you can see that SPR's declined, but commercial stocks have really kind of kept steady, and now commercial stocks are about 90% of SPR stocks. So is this a reasonable level of security? Is commercial responding to the situation? The cyan line is basically the days of refinery input. Again, spiked during COVID, spikes during hurricane seasons. Is this a reasonable level of security? Maybe, maybe not. This is from OILX research, and this is looking at the sweet and sour composition. Now, I've got a video on benchmark crudes that talks about sour crude versus sweet crude and what all these different things are. And according to OILX, he's looked into it in quite a bit of detail. SPR is releasing much more sour crude than sweet crude. And the sour crude is needed by refiners to produce the heavier fractions, diesel, residual fuel oil, to some extent kerosene. Sweet crude is basically close to being gasoline, which is about half of US demand, but the other half tends to be heavier stuff. So the SPR was about 60-40 in terms of composition in 21. Now it's kind of 50-50 because the sour crudes have been sold off. And this is why sour crudes are so important. So this is a graph with API gravity and percentage of sulfur. These dots in here, these are all light US crudes from shale basins. They tend to be high API, low sulfur. Whereas these crudes here are the heavier crudes, so Western Canadian Select, Maya from Mexico, and they tend to be blended in for refining. So the blue dots are the average refinery inputs that US refineries need to produce all the petroleum products that they make. And the red star is Russian Urals crude, which just happens to be in the ideal range. And this is a graph showing, again, taken from my video on market crudes, showing the relative percentage of crudes that the US produces. So again, API, sulfur percentage, and the size of the bubble is the size of the production. So where next? Don't know. I mean, how long will the sales go on for? Now, there's the June auction will deliver in August, September, so that will go down further. 39 million barrels have been sold at that particular auction. Another 20 million barrels will announced on 26th of July. And the aim is to reduce gasoline prices. In November, we have the midterms in America. Biden is not very popular, and gasoline prices are a major impact in the well-being of Americans. Will the sales continue to stop after that? Will the government refill the reserve in the near future, the far future, ever? The White House announced plans for refills from after fiscal year 23 ends, so that's basically October 24 onwards, which is a very long time in the future in terms of oil markets. So we'll see what happens then. RBN Energy had a few graphs. So again, this is echoing to some extent what OILX said. So that's the sweet crude, sour crude, and that's their forecast for future sales. So again, November, midterm elections. What happens then? We don't know. So to sum up, SPR is America's oil piggy bank. It's a safety cushion, and they've been eating into it. Its aim is to make sure that the US has sufficient oil to function if supplies are interrupted, either through problems in the Middle East with exports, sanctioning various countries, etc. So there's a cushion of reserve and a cushion of safety. It's also been used to stabilize the market. So either when you've got a situation where there's a shortage, so you release, or where there's a glut, you take oil in. And they've been doing that successfully throughout the last 20 odd years. The US government has sold off about 21% of the reserves since January 2022. But they still have 60 days or thereabouts of oil refinery input in stock. So that's both commercial and SPR. So that seems a reasonable cushion. But how long will the sales continue, and where do we go to next? So thank you very much. Please like, please subscribe, and I'll see you in the next one.